Hey, what's up, everybody? All right, so this is Chef, and today we're just going to talk about a couple things about trading styles and some questions that I had within a couple of people. Okay, so I guess one of the main questions here is about like finding your trading style and figuring out like what you want to do according to your lifestyle. One of the biggest things that I tell everybody is that everybody's lifestyle is so different that you specifically gotta know when you're able to specifically look at your phone, right? Because most of you can't sit in front of a screen for a couple hours or in the morning or maybe midday or towards like the ending of power hour. And you can't really sit there and look at a chart, right? Because it's you're at work, you're busy, you have a busy lifestyle, okay? Whether you're here in the US or all the way in Singapore. I know some people who live in Singapore who actually wake up and in the middle of the night they're up late and they're still trading. Then they go to sleep and wake up and then take profit on their positions, or they're literally stopped out in the red. So everything depends just on who you are as a trader, right? So how do you look for things that make sense, right? So finding your trading style, finding trading style is like the biggest thing, right? So finding trading style and time frames. Okay, these are the two biggest things that we must understand in order for us to specifically get into a trade, specifically according to your lifestyle. So according to lifestyle, and again, everybody's gonna be different, so it's kind of hard to pinpoint everything specifically that caters to each individual trader. Everyone is different. Okay, finding your trading style. Number one, you gotta. Okay, so this is how we're gonna do it. All right, so finding your trading style according to your lifestyle, and then you're gonna base it off time frames, right? Time frames are very important to understand because a lot of people like to scalp. Day trade. Day trade is basically from like 15 minutes to about an hour. Scalping, you're talking about from 1 minute to like 20 minutes max, holding a position, or even 15 minutes, somewhere in between. But scalping, usually in and out positions, usually lasts about 5 to 10 minutes max, right? Um, Holding a position basically all day, where you can enter and exit, but you got to be able to monitor that specific position. When it comes to swing trading, it gets a little more difficult because now you got to be patient, whether you're going to be red or green on the position. It's all going to depend on what you grabbed, right? So, number one, finding your trading style, you got to ask yourself, how much time are you available to look at your screen? How much time are you available to open up your phone and enter and exit a trade, or just simply enter a trade? But once you enter, you got to find the next time where you're going to be available to exit your trade. Time frame. All that has to do with finding your trading style and according to your lifestyle. Okay. I am a chef. And basically, if I'm not around, as of right now, at the current moment, I cannot open my phone and go and search out trades. So, number one rule, I don't need a trade. That's it. Until I get situated and find time, then I can decide when to take my trades and when to open them. As of right now, I can't, so I don't need to trade. I don't need to look, and I'm okay with that. So time frames. Time frames. We're going to talk about some swing trading and what to look for. Right. A lot of you guys don't have time on your hands to be checking out charts. Right. My biggest thing is you always want to find something that makes sense and find something that you specifically believe in. Find something that's going to be at a demand on the bigger time frames. In this case, it's going to be your weekly time frame. It has a lot more strength. If you come on and you're like, okay, I'm gonna go look at this 30-minute chart. The 30-minute chart's not going to have the same strength that the weekly time frame is going to have. Okay, so you start on the weekly time frame. Remember, all this has to be set up on Sundays. You can't come on here Tuesday and Wednesday and be like, oh, that looks good. All right, you have to do it on Sunday. Okay, so look at the price point for shop 28.21. This is the lowest that it's been in the past 3 years on the weekly time frame, and we're currently right here at this level again. We're finally hitting today. So if you ask me, I think this is one of the better swing trades in my opinion, even though the market looks a little bearish. It looks volatile in so many ways. There's a lot of economical events that are affecting uh, the the movement of stocks in general, and it's causing a lot of inflation and fear of recession, and so much other stuff. But regardless of all that stuff that's happening, I personally think that chop is like the perfect trade for somebody to enter and have a very low risk stop loss, right? So in this case, like let's just say you bought it at 30, your stop loss becomes 28.21. You know that the bottom is in right there. So if you get stopped out, you'd be okay. You won't lose that much, right? Number one, because you're not going to put in your full portfolio. Number two, because your reward is all this versus like that. So it just makes perfect sense. So when you want to look for a swing and you're busy at work and you want to find something that makes sense, find something on the bigger time frame, a weekly demand level that's that we're kind of chilling on, and make that be your swing trade, right? So in this case, let's draw that bottom line. Okay. So I'm gonna grab the candle bodies. To me, the candle bodies just make more sense. So now I'm gonna grab that top. Okay, so that's your weekly. And I'm using that just because a lot of the candle bodies touch there. As you can see here, we kind of built a doji. Oh, all right, so here we have that doji, and then nice followed by a red candle, and here the candle's getting smaller. A lot of times that signifies when the candle starts to get smaller. It usually means that it's going to be a slowdown, so there's not a lot of selling pressure. The selling pressure kind of like, I'll just give you an example here. Here's some big candles. Here was a nice candle here that closed. Solid red one, red one, red one, and then it started getting smaller down here. So as you can see, the candle started to get smaller on the selling pressure. And then as soon as it ran up, it came back down with selling pressure. But then again, there's smaller way down here. So the candles are getting smaller in the demand area. So the risk to reward just has to make sense, right? If you go through many tickers right now, you won't find that many that look like this. Okay, so this to me looks like a straight buy. And the best thing to do when you're grabbing these contracts is always good to have a big account and not such a small account, right? Because I know a lot of you guys always think you guys can swing trade and you're like, oh, it's 100%, and you get so excited about a swing trade. But in reality, there's nothing you can really do if you can't look at your trade. What you have to do is set up a stop loss based on your OCO brackets and put that on a percentage stop loss, because if it does drop here, and you can't look at your phone, is going to stop you out without you having to go and open up your phone. So you don't really have to worry. But if you don't set that OCO bracket, you're gonna basically lose tons of money at the end of the day, right? And you're gonna hurt yourself. So don't do that. So the next thing is, what kind of contracts can I look at, right? So this is where you go look at the trade tab. Remember, I just looked at the weekly time frame. So today is Tuesday, just an example. You still have Wednesday, Thursday, and Friday, the next 3 days while the market is open. Do you want to have a short-term swing, which you will not look at the weekly? This is considered a weekly. This is your next week's contracts, okay? So you looked at September 9th, and this costs 31.50 calls, which we're not far off. And like I said, your stop loss would be 28. It's you're putting in 150 bucks. So if it does drop, you'll probably lose like half of that. So are you willing to lose 50% of that specific trade? It's a swing trade. If the answer is yes, then you only get one. Now, if you put two, then you do the math. And if you're okay with losing half of that, then you need to answer that question. You want to do a little more time. So you just want to let the rest of these few days of the market open, Wednesday, Thursday, and Friday. And then next week, let it do what it does. So you would grab the 16th, and you basically get like 2 to 3 weeks out, and you're paying $2, right? So are you willing to lose 100 bucks on this trade, 50% red, and allow it to develop in that specific area, and let it build support here, and give it that time to actually go sideways, and once it starts to go back up, you'll be a little more safer. So you basically buy time, and time is your friend, right? Theta is the worst thing ever, because if you're grabbing, like, let's just say this 40 call or this 44 call, and this thing goes sideways like this, your premiums will lose value, and therefore, even if we do roll up, your premiums are not going to go in the money, or they're not going to have a high percentage return as you would a closer strike point. So the 3150 or the 32s, or even the 30 if you can afford that one. It just makes more sense. Now, if you want to pay for cheaper contracts and give yourself a little more time, you can buy the 40s, you can buy the 38s. Just know that you're not going to make tons of money, which is okay. It's nothing wrong with that, right? So you can see here that they're less than $1. 39, they're like 25 cents. So if you can buy like 4 of these, and you can spend $100 for, September 16th, what is this? 39 calls, it's not a bad idea, right? But just know that if it does go sideways, your premiums will lose more value the further out the money that they are. The closer they are, the better it is. The further it is, the worse it is. Okay. So hopefully that kind of makes sense for you guys. So remember, if you can't look on your consistently because of your work interference, then it's always good to find things that are like this, right? So just another example, I'm gonna go look for INTC. These are the things that can potentially happen if, let's see, this continues. If you end up grabbing something that doesn't go your way, right? So here's an example of INTC, right? Let's just say you found INTC right here. You're like, oh man, like this is a very strong demand, right? So you see all those wicks. This is like the bottom of it. We came down here and we're like, oh shoot, like let's grab a swing trade. So let's just say you were green that week, and then the next week you ended up being red, and then this week just flushed through. At least you would have stopped out in the green way up here, right? So let's just say you bought it at 42, you ran it all the way to that 45, pretty decent. It didn't continue. You try to buy it again on this red candle, and it actually failed. Let's just say you try to buy it here again, and then you got stopped out. No big deal, right? That's the kind of stuff that happens, because not all the time the demand is not always going to hold. So you always got to remember that. But you just got to make sense that when you buy a demand, your stop loss is right below. And these are the bigger time frames, okay? The bigger the time frame, the better it is. And like I said, you got to let it develop no matter what, right? So in this case, let's just say, here's the example. You go on the 4-hour time frame and look what it did, right? Let's just say it dropped back inside, and now Monday market opens. You got in here. You would have been red one day. You would have been sideways, and then you would have closed green at the end of the day. And then on this day, you would have been super happy, right? Monday, Tuesday, Wednesday, Thursday, and then Friday comes around, and that's when you're already in the green. So technically, you let it go sideways, you let it build, you let it rally, and then you set a trail stop. If you would have swung it on Monday, I think you would have got stopped out because it came back down. But either way, that Friday, you would have basically caught from 42 all the way to 44.60, or even just at 44. You caught a $2 move on INTC. It's not bad for a swing trade for something that you can't really monitor. Okay, so it just kind of makes more sense that you got to make sure you trail stop, right? So for example, this one I would have never got stopped out on, just because my stop loss would have been down here. Anyways, let's just say you ended up green on this day, right? What you want to do here is you always want to make sure that the next day you use those pre-market levels, right? In this case, this would have been your trail stop. So technically you never got stopped out. The minute you open up your phone, like let's just say midday, this automatically becomes your trail stop, that wick or that candle body there. So you technically would have never got stopped out of this specific trade. And then you come towards the close and you're like, okay, I'm gonna get out this trade. Last 10 minutes of market open, and you sell that into strength. And who cares what happens next? Who cares what happens the next day? At least from Monday, Tuesday, Wednesday, Thursday, Friday, this played out in your favor, right? So the perfect example here is going to be SHOP. And I'm using this only because I'm in this trade already, and also giving you a good example of something that can potentially be an amazing swing trade in the next few weeks, or either to the upside or downside. So kind of give you an example of choosing a swing trading according to your lifestyle. If you cannot monitor trades, the best things to look for are bigger time frame demand zones, and those bigger time frames are going to give you more confidence and more strength on the bounce. If you go on the smaller time frames and you see like one or two touches, it's not a strong demand. In this case, what do we have? We have 1, 2, 3. I mean, it's like 4, 5, 6, 7, 8, 9. So all these times that it touched here compared to here, 1, 2, 4, 5, 6, 7, 8. So 8 and 9 on the bottom. I think that's a sweet deal if you ask me, right? Because price action is something that's happened in the past, will most likely happen in the future. And that's kind of like what we do. We take trades based on probabilities, and the probability here that will bounce, that's the type of trade that we're taking all the way to that 40. So yes, I think shop is at a great spot. Now, is the market in a great spot? Probably not. But either way, regardless of all that that's happening, I know my risk. I know that what I'm entering here makes perfect sense for me. But at the same time, I am aware of the market conditions, right? So always make sure that the market condition is in your favor and not too crazy, just kind of like these past few weeks have been. And that's what makes it a little more difficult as well. Knowing your economical events, knowing how they're affecting the markets, knowing who's speaking, and a lot of that stuff, you got to be up to date and know how those things will affect certain sectors, right? Shop is online shopping and buying, so spending. Okay. But either way, we're still at demand. And to me, this looks like an amazing opportunity for me to take a trade, swing trade, buy it at the market open, and let it do its thing. And the cool thing about it is that when you go to the trade tab, like I said, you have an option to choose what short term, long term, whatever you want to do, right? So let's just say you wanted to buy a leap for 17 to 23rd, right? You can invest as much as you want. I'm not going to put a limit on you guys. But let's just say we're at 31.36. The closest strike right now is the 32 and the 33, right? If this does drop down to the 30 or the 29, you're losing this much versus the reward of that much. Okay, so you tell me what your risk to reward looks like. Okay, so this is your risk, and let me do this. This is your reward. Okay, and it just makes perfect sense, right? If you're not able to go look at charts on a consistent basis, all you got to do is set some alerts. Make sure like this world is made up of social media and alert systems and smartwatches, and I don't know what else you guys have out there, but it has so many smart systems that you're prone to not fail. Okay. And by that, I mean that if you don't set alerts, if you don't set like alert on your calendar or your timer where it says, hey, you know, market's about to close in 10 minutes, go and check your phone. At that time, you can literally go walk off to the bathroom wherever you're at. Okay, if you're at work or you're at Disneyland or wherever, and go and check your phone real quick. Therefore, you go and check and see, okay, did my alerts hit? Did my alerts go off on my Apple Watch? What does the market look like? Can I go direct message a mod in my server, whatever server you're in? Can I go message my mentor who's mentoring me and ask them if this is a great buy opportunity? Can I still enter this? Things like that. So you can do all these things. And I'm telling you that don't limit yourself, but just make sure that you're in the proper position of buying like what you feel your investments can handle, right? Your emotions. If you're gonna buy this, and let's just say you put in $1,000, but you're afraid to lose that $1,000, don't put in $1,000. Put in 100. That's all you got to do. If you're not afraid to lose 10K on this position, put in 50K. Okay. If you're afraid to lose $100, put in $20. Like, that's the kind of stuff that you got to ask yourself. Is that dip buy opportunity swing trade that may go sideways for a few days and then pop later worth investing 660, right? Or is it worth investing, let me see, October 7, 280, 295? Is it worth investing 210, 250? Is it worth investing 150? That's what you got to ask yourself. Remember that the time on the contracts, the expiration is always better. And the closer you are, the better it is for those contracts to get juiced up on premium. So basically make more money. The further you are, the strike price, right? Let's just say you bought the 42 or the 44s, the less money you will make if it goes sideways. Okay. It may take a little longer, but you definitely can catch that full move, but it's always better to grab the closer to the in the monies. Okay. So for shop, hopefully that made sense for you guys. For shop, what I want to do now is give you guys the levels as to how to um, enter this specific trade, right? So what I'm going to do is I'm going to make sure that I have this marked. Okay, so that bottom, that 30-30, and then that top right there of like that 31. Okay, so we're going to use that 31. So now I'm going to delete this because I don't need it. I do know that these two lines are important to me. So if you could do whatever you want on your charts, for me, when something is very important, it's at a zone, I make sure that they're yellow. Just because it helps me when I open up my phone and I get my alerts, it's going to alert me at a yellow line. So meaning that that's going to be my demand. The blue ones are just whatever. You can do whatever you want: pink, brown, gold, orange, red, green, whatever lines you want. I have these set for blue, my custom, and that's just what I prefer. And right now, I'm in a contract I got in on Monday. I'm still in my contract, and tomorrow I'm going to add to it down here on that drop. If it doesn't drop, that's okay, because I'll still add as it goes up. That's my whole plan, right? So my stop loss is going to be 30-30. Okay. If it does drop, let's just say, for instance, tomorrow drops and it does something like this. At this point, I'm going to cut my loss on my position, and I'm going to wait till it hits this 29. When it hits that 29, that's when I'm going to buy it again. And I'm going to watch the reaction of these wicks. So all these buyers who got in from 31.30 all the way to this 29, I want to see the reaction, if it's going to be the same, and bring it back in. So I'm going to look for the drop down and the snapback that may do something like this. That's the kind of play that I want. And that's the reason why I entered a light position here. And I want to add as it goes up. But again, if it does break the 30-30, I'm going to get out my trade and not have to worry about it. So shop is a good one to be trading. So you can also do this here. Somebody out there is going to probably draw this here, and they're going to say it's a falling wedge or whatever you want to call that. No matter what, you're at demand. I don't care how you want to see it. We're at demand. Okay. So just giving you a little example of, you not being able to look at your phone and this and that. You want to swing trade. Remember, like, if you can't look at your phone, guys, if you can't chart, don't worry about it. Okay. Just make sure that when you plan on Sundays, that you find things that are like this and you wait for these trades specifically, and let these trades be your only trades. And I can almost guarantee you that if this is the only thing you look for things that have touched multiple times and have good structure, candle bodies down here, and a consistent basis. They bounce up, they bounce up, bounce up, bounce up. Who's to say that this is not going to bounce up right here either? Okay, that's the kind of stuff you got to look for versus swing trades. Now, breakouts, never ever swing a breakout if you can't monitor it. The only reason I say that, it's because look at the way that this acted, right? So this finally broke out. Cool, congratulations to all the day traders and swing traders short term. But if you would have got in here and you're like, oh, okay, cool, this is finally breaking out, yay. By the time this goes up, you're like, okay, cool, I'm gonna go back to work, and you forget about setting the stop loss because you're super excited, you're super in the money, your contracts are juiced up. Next thing you know, this happens and you're all the way in the red, and you're sitting there wondering, like, why didn't I why didn't I take my profit, or I'll give it another day. And then that's where you find yourself making excuses of bag holding a losing trade, and then you're screwed and you're in the red, and then you're wondering why you're still holding it. And then the mentality comes and says, well, I'm already red 80%, might as well just let it go the next 20. That is a bad habit. If you ever get to that point, please just cut your loss and walk away, and don't let that ever happen again. If you have that attitude that says, I'm already red, what's the worst that can happen? You should not be in any trades. Get the heck out, go get your mind right, and come back and look for a different trade a week from now. Okay. Plain and simple. That is a bad habit. That is the bad language to have. You shouldn't be having it. So I know some of you are going to feel that. But yeah, never swing trade a breakout. It's always better to buy on a dip at a demand level where something is going to make sense and be in your favor. Low risk, so your risk is only about $1 or $2 versus your reward is about $8 to $10. So that's the kind of stuff you want to look for. Okay, I'll give you another example. I'm going to show you TWLO. Now this one is a little bit tricky because I am looking at this, and unfortunately, this one again, when you take that chance to buy the dip, sometimes it just doesn't work out, guys. All right, so you got to remember that it doesn't. Now, for this one, there's not a lot of structure down here, but it's definitely an area of support. The structure is technically up here. Okay, this is your structure where every time it bounced, we ran up. Now, had I bought the dip here, look what would have happened the next day. The next day, it actually dropped down, and it dropped down again. So at this point, I would have stopped out on the next day, and unfortunately, my swing would have been the opposite direction, and then I would have called it a day. That should have been fine with me. Could have tried again and be like, okay, well, let's buy it at this wick. And nope, it flushed all the way down and it continued down. So as you can see, it's still coming down. And this is the kind of stuff that happens. So this is the reason why sometimes you don't need to swing trade all the time. And swing trading can be a bit tricky according to what the market conditions look like. Okay. So this is just an example of us getting stopped out had we taken that specific trade once or twice. And again, don't be afraid to try to get back in later. So yeah, hopefully that helps you understand, gives you a better explanation as to what to look for. Okay, those are the kind of things you look for. Look for structure, look for demand on 4-hour time frames, weekly time frames that are going to be at demand that just makes sense, especially if you can't monitor your positions on a consistent basis like that. Right, find your trades on Sundays and set some rules. Okay, that's all you gotta do. Be patient. Be patient. That's the biggest thing. All right. But yeah, other than that, guys, hope this helps you. I know we didn't get too much into the day trading, but I think we can talk about that one a different video, right? So we talked about the swing trading according to your lifestyle and time frames. That's the big time frames about swing trading and finding your edge. Okay. But yeah, this one caters more to the bigger swing trades for those who can't really watch the markets. All right. So if you do day trade, shop, let's have fun. Right. All right, guys. I'll see you on the next one, and I'll follow up with you guys next week on this, and let's see where shop decides to go. Right. Because I am definitely in some calls on this one. But yeah, stay green, and I'll see you on the next one.